Let's get real. Real estate is confusing. Let us help, guide, teach, educate, and make real estate great. Josh, we're live.
We're live, and
you are alive.
Actually, the craziest thing is I'm alive.
You are. You got
my wife is gone, and I've been taking care of our 4 boys. Surprisingly, we have not let the house burn down, which is good. And so I'm alive. We're well. I'm gonna have a little bit extra coffee.
So you carved out some time for us today.
Absolutely. For you guys on YouTube, of course, we carve out time for you.
Yeah.
Sorry for those. We are a little bit backlogged on email, so I just want to apologize right now. We are getting through those, but anyways.
Definitely. Well, guys, we got a lot to go through. I know we missed some last week, so we kind of mixed everything together. I'll kind of pull up what we're going through here. Big news. Obviously, we've been calling for this for a long time, Josh. We know rates are going to go back up over 7 for the majority of Americans in the U.S. I know local banks here are a little lower, which will show that, but pretty difficult times right now at 7%.
Yeah.
But it's insane. Some things we're going over today. We're going over buyer demand, current housing market, U.S. and Idaho. Also updated forecast, market updates. Mortgage applications are down again. We have an article to go over about Americans being misinformed, and we have $2.3 trillion lost in value of inequity in homes.
Yeah.
Again, this is open forum, open questions. You guys have questions, go ahead and comment. We'll throw them up on the screen once we see them, and we'll react to them when we got time.
Yeah. And we may not answer those questions right away just because if we're in a main point and we want to get some things. So, but post them and we will eventually get to them.
Yeah.
Also, if you haven't, we would love it if you like this video. That just helps us with YouTube, and it always.
Yeah. Speaking of YouTube, lately our videos have been getting shelved after about 2,000 views. We're trying to figure that out, sort of flatlining. So yes, please like and comment. And if this is worth anything to you, please share it. I mean, that's what helps us grow.
Well, and I should say too, we had people reach out to us directly and said, "Hey, I tried to subscribe," or "Hey, it took 2 days." So make sure if you are subscribed and you want to see our updates, that you hit that notification bell because.
All right. You got any housekeeping items, Josh, before we jump into it?
That was it. I just want to make sure that if you haven't liked this video, that really helps us, and share your questions, and we will try to answer them.
Perfect.
And also, if you just want to share a comment, it's not even a question. We even share those. So
yeah, definitely.
All right.
I see we do have some comments. We'll jump into a few slides here, and then we'll jump into the comments after that.
Okay.
Cool, Josh. Well, I'll let you run with this. I know we kind of just released a video. What's going on here? I kind of threw the slide together. This is what you posted on our community board on YouTube, and actually people are reacting to it. These are rates were actually lower than what we're showing on the right hand side of the screen here. I'll make it a little bigger so you guys can see. Basically, the top arrow there, that's showing last week. And then this bottom arrow on the right-hand side is actually showing the updated numbers nationally, I should say. But what do you got on that, Josh?
Yeah, well, but if we were to go back 2 weeks, so if you guys remember, I'm sure if you guys are on YouTube or social media, you heard agents back in early February, late January. We hit the bottom of the market. We're seeing multiple showings. Lock boxes are being popped, and we're going to hit more of that later. But something I just want to remind you is January, a handful of buyers come into the market. So every time that I'm talking to a seller, I say, hey, we need to list your house January, February, March, because we're going to have the least amount of competition, because as April and March, April, May come, we're going to get more and more inventory. So you're going to have more to compete against. And that's still true today, right? In January and February, we saw more buyers hit, but also because of that, we dropped into the 5%. So we dropped, at the 5.99, somebody could get at a par rate. And then just on Monday, we were helping some clients over the weekend, and one of the lenders said, "Oh, whoa, we just lost 50 basis points this morning," which what that translates to is, let's say the rate was 6, and on Friday, we had a holiday on Monday, so that following Tuesday means that now it's 6.5%. So interest rates jumped. And he went on further to say the last time we saw jumps like this was back in May of 2022. And if you've been following our channel, you know that back in May of 2022, that was the peak of the market, and then down went the buyer demand. So yeah, it's definitely not what we expected. We thought that yes, interest rates are going to be held higher, but as we saw them kind of creep down because the 10-year treasury came down, but then that sticky CPI report, they thought the inflation was going to come down faster, and it didn't, which then created the bond market to rally up quite a bit. I think it rallied up about 60 basis points, which then reflected our interest rates. So,
yeah, it just kind of going back. It's just it's kind of it's hard to look at because this is what a lot of Americans are dealing with right now, trying to purchase a home. And going to this article later, kind of seeing how people are trying to purchase when they can't because their buying power is so down. I mean, with cost of living, inflation, on top of this, the term that's going to be used later as well. This historic highs. I mean, we've had this in the past, but it's not the same as it been, in the last 30, 40 years. It's not even the same. They can't even compare it. Yeah. I'm sick and tired of agents trying to peddle that it's the same thing as it was in the 80s. It's not. I mean, we're not paying $40,000 for a 2,000 square foot ranch home with an acre.
Yeah. I mean, just to put in perspective, right? Before we even started this, we reached out to one of our lender friends. We said, okay, I want to buy a $500,000 house. I got really good credit score. I'm putting, what did I say? Let me check. I think I said 5% down. And what kind of income do I have to have? And the reason why I said 500,000 because that's our median sales price right now. And we know that half of our inventory is above 500,000 that's currently on the market. So yeah, I said 500,000, 5% down. That person would have to make 90 to 95,000 with no debt. Again,
household income, right?
Household income with zero debt. So that just kind of gives you the state. Our median household income here is about 72,000. It might be 80. We don't have the very latest data on it, but right now it's about 72,000. So even the median household can't afford to buy the median household, the median house. And so, and on top of that, we have half of our inventory above that 500,000. So yeah, it's interesting, but
yeah, it's hurting a lot of people. And I mean, to kind of wrap this up, I know, we're over 7. I'd have to look back. I think we're near, historic heights where we were when we first started these videos a couple months, or what now, going on 8 months now, when they were approaching 7, but now we're well above 7.
Yeah, nationally, and that's nationally. And so here locally, I think you're right around 7.1.
Yeah. So I got let me close your comment there. Yeah. So this is local. You can go over, Josh, if you'd like.
Yeah. This ICCU, we just jumped to ICCU because they always post their rates, and it's nice to get a quick snapshot, when we can't just call in there and say, hey, what are the rates? So right now, ICCU is showing 6.75, which is normally the most competitive rate on our market. Mortgage brokers and whatnot are a little bit higher than that. So
yeah. Definitely. I did want to go over this question from last week. It kind of, or the other day when you posted, that kind of struck me. It says, can you comment on days on market? I believe this number is understood as almost all the homes we've seen come off market every month and then push them up in the new category and then to restart the clock. Many homes out there didn't sell last season. I think what they're trying to allude to, which kind of annoys me sometimes, is, how a lot of agents are saying constantly that inventory is at a record low when it's really not. We have record high inventory in the last year, correct?
Well, year over year, we're higher, and you'll see that here in one of the slides that we put. Yeah. But when we're talking about days on market, one thing that again, as a listing agent, this is something that we have. Our job is to promote our client's best interest, and we know that if somebody sees that this house has been on the market for 300 days, 200 days, 150 days, then a buyer's going to come in with the mindset of, hey, I can negotiate because they haven't been able to sell their house. So with that being said, what agents are doing, which skews the days on market, is if you pull it off the MLS for 30 days and then you put it back on market, then it starts your days on market all over again. And and we are seeing that, like Lynette said, just this week I talked to a couple homes that have been off market that are getting ready to come on market, and they're getting ready to relist their house. March is what these other agents are telling me. So there's a couple of these houses that we're following that, that we've talked, and that, hey, we're going to relist our house in March. And so, we are going to see, I think we're going to see a good chunk of those homes that got pulled off market start. We've already seen them hit the market, but we're going to see even more hit the market coming into March and April.
Yeah. To kind of wrap the whole thing about saying is the last year we have inventory, and we have a lot of people pushing that inventory at record lows when I think we have record high inventory, year over year. Kind of clarifying that a little bit. Speaking of that, you can kind of go into your breakdown right here.
Yeah. So this is like as the time that we put this slide together. So this will be a couple hours ago, but what we did is we looked at inventory. So what is the inventory that we had in 2022 and 2021? And it looks like our inventory was at 303 or 493. Hopefully you guys can see that. But what we currently have in Ada County as a whole, and this is single family homes, we have 1,306. So there's quite a bit more inventory in the month of February than there was in 2022. And so we just want to bring that up. But the other thing we have to look at is, okay, we're looking at inventory, but what are our pending sales? Because yes, we did see a flux of houses going pending. There are people that are saying, hey, we've been watching these houses and now they're off the market, or now there's a contract on them, which is, yeah, we're not denying that, and I just want to remind people back last year in 2022, when the home prices dropped almost 19% before the end of the year, there was still homes being sold. So we're not saying homes are not selling. We are just saying that we are in a correctional market. So going back to the pending, so we are about 200 and give or take 80 homes shy of what we need to be pending in order to match up with February. If this number stays the same and our solds go up a little bit, because we are going to have some solds between now and then, but essentially this weekend, there needs to be about 280 homes in Ada County go pending in order to match what we did in February. And then our sold sales, we're still down about 210. So we're down 210 homes for being sold. So again, and we are going to see that number increase in the last week of the month. There's normally a handful.
You think we'll make it?
I don't think we're going to hit it. Based off our pendings, I don't think we're going to. I think all these numbers are going to be lower, or except for our inventory. I think the pendings and the solds are going to be lower year over year. So
right, definitely. Well,
you want to let's grab some questions.
Yeah, before going to this next article, I would start with the questions here from Alex. Hopefully, I can read all that there. So some say riches are won and lost in economic times like we're in now. You guys are aware of the risk and respect it clearly. Do you feel now is the time for those that are tolerant of risk to be going for it?
I think there's I still, again, I do invest in real estate, but I'm still on a pause. I don't think the values are where they need to be. I think we still have some more declines coming. And so I'm not throwing my money into real estate other than what I already have into real estate to answer that question. As far as stocks and all that kind of stuff, unfortunately, I'm not a financial advisor and I don't want to come across like one. What do you think, John?
Same thing. So in this environment we're right in right now, of course, I love real estate and I love investing into real estate. And I do have some people that ask me, like, we have all this cash, what should we do? And it's like, well, we see the data all day. We still see it coming down a bit. And I don't think we've hit the bottom enough. I don't feel personally comfortable to jump unless there's a situation where it's a good deal and you can run the numbers and it's beneficial to jump in. And I think that's the biggest thing, is being educated about what you're doing. Because if you're just jumping in because of emotion or, someone else's opinion, I think that's where people get in trouble at.
Yeah. And I just want to say on top of that, I had one of our subscribers text me the other day, and he's essentially what he was just saying is, hey, what we brought forward made him go and do his own research. And after doing his research, he decided, hey, I'm not going to buy a house right now because there's X, Y, and Z. And so I would just want to take this time to encourage you guys. What we say is just our opinion or what we're reading, and everybody can read data a little bit different, right? But you should still go and do your own research. We believe that it's still going to be correcting, but we don't have a crystal ball, and so we just want to encourage you to do that.
Yeah, I just don't want to be catching falling knives right now.
Yeah, so there is a time to catch falling knives.
Sometimes,
especially if
it can be bloody though. So you got to.
If you're a one of them jugglers, they can juggle knives.
Like and what if it's on fire?
They've done that too.
Okay.
They've done that too.
So. But I think this question can go very broad too. I think there's a lot of other things people can be investing into, like, land or self-sustaining land or food or, farming type or things that, income producing things besides real estate. There's a lot of opportunities out there. And I'm not saying there's no opportunities in real estate. It's just right now is time to really study what you're doing.
You really got to sharpen your pencil when you're jumping into an opportunity. Yeah. So, and by the way, what do you guys think? Do you guys think right now is the time to, if you're risk tolerant, to jump into something? Let us know.
Yeah, definitely.
So
awesome. Thanks for the question, Alex.
Let's maybe do 2 more and then let's get back to slides. Cool. You think?
Sounds good. From how we became debt free, I think we'll see 10% by the end of 23. So I think you're saying 10% drop, another 10% drop.
Which, we said back in May of 2022, we're going to see a 30% drop. So if our guess, our prediction comes true by the end of 2020, it aligns with that. And I think I don't remember if we have these articles in here or not, but some of these articles like Moody and Fortune, they're saying that the Boise market is going to see another 5 to 9% decline as well. So
well, that's on our last video.
Right along with this.
So Yeah. Coeur d'Alene, they were calling for 5%, and then what, 9 to 15% here locally?
I think 9.9 was,
Okay.
yeah.
Definitely. Awesome. Well, thanks for the question. Do one more here from Traveler. I'm waiting for realistic price drops. There's no way I'll re-enter the market with the current prices. Josh?
Yeah. Yeah. Well, and that's the thing, like with me, right? So I am not investing in real estate right now because the cost to borrow and buy that house, I can't even rent it out for. So it doesn't even make sense to buy a house. And that's why those who are entering the market, we're just like really trying to encourage them. If you're going to get in the market, like you just got to understand there's a possibility, unless you're putting a lot of money down, which we do have clients that are putting a lot of money down. If you're not putting a lot of money down, there is risk that you won't be able to rent this out. So you just have to really be sure that you want to be in this home for,
here's the deal too. I mean, besides investing, but some people are moving to there, they have to buy a home.
Yeah.
I mean, real estate's being bought and sold all the time, and it has to be done. I mean, it's going to be done regardless of what market, unless we have a complete calamity, but people are going to be buying and selling, and we're in the business of real estate. We buy and sell real estate for our clients. So we're not saying never to buy real estate, but you got to be smart, educated, know what you're doing, work with the right person, and not get yourself in a horrible position. Because at the end of the day, I mean, you're the one making the mortgage payment. So
absolutely. Can I give you a quick example? I had a
sure. You
a
got
client.
2 minutes.
I'll do 1 minute. I can do
right.
it in 1 minute. I had a client reach out to me. They were going to buy a triplex on the bottom level, and the top was triplex on top. The bottom level was going to be office space. And he sent to me. He said, "Hey, what do you think?" So I ran it through our multifamily calculator, and I sent it back to him. I'm like, "Well, you got to be about $100,000 less for it to cash flow." So, just because it looks good doesn't mean it's always good.
Yeah. And I want to bring up, I think I misread that comment from How We Become Debt Free. Let me throw this up. He's saying 20% drop in prices, 10% interest rates by the end of 23. So I need to comment on here, interest rates. So changes a little bit. I mean, I don't think he's far off. I mean, people thought we were insane when he said we were going to have 5% interest rates. And I mean, we're every day, we're approaching closer and closer to 10.
Yeah.
I mean, realistically, it could happen depending on economic and, events going on around the world right now.
Yeah.
They can create that.
Yep.
What do you think, Josh?
10%, that's pretty high. So the bond market really's got to shoot up for that to happen. 20% drop, I don't think it's out of the question.
Depending on the type of property, though.
Depending on the type of property, and what's going on. So
yeah, definitely. Cool. Well, we'll jump in the next article, and then we'll get to the rest of these questions here in a bit. Let's go. Okay, I want to put this up here because a new survey came out saying that Americans are wildly misinformed on the housing market, and I feel like everybody, I wouldn't say everybody, but people generally into the real estate market are wildly misinformed. I mean, how many agents do we have here in the Valley, Josh?
I don't remember. I think it was like 5,000.
5,000, and how many?
And we keep asking for like updated, like how many realtors renewed their dues, but unfortunately, we can't get that from our local association.
And how many agents have sold more than 5 properties in a year?
Yeah, that's.
But anyways, where I'm going there is, I mean, there's tons of. I'm not saying they're dumb or stupid. I'm just saying there's a lot of misinformation, and not a lot of education on the financial markets, the real estate market, and how the whole process works.
Well, I don't mean to interrupt you, but I think this article though is also talking about buyers, right? There's a lot of times that we have a buyer that's super excited, wants to buy a house, and then we start talking to them. Okay, we need to get you in front of a lender. There's certain steps that we need to take, and by doing that, sometimes it's like, oh man, I got to pause. And I think this article, and we have a slide that goes on further, where it says like, okay, I want to. This is a goal I have, and now they talk to a lender and say, okay, actually, we got to hold back because I'm not going to fork over a $2,200 payment for a 3-bed, 2-bath house.
Well, that's why it's coming out saying most Americans on average hope to spend, looks like under 270, but realistically up here on top, where they're about $100,000 short on the shortfall there, because the average sales price in December in the U.S. anyways was $388,000, so they're 100 short. I mean, that's a big increase in payment wise too with 100,000, which people I don't. That's a big wake up call for a lot of people on there.
Well, I think that's too why people are seeing a lot of lockbox activity. So we've been showing houses to clients, right? And every agent's like, oh my gosh, I've gotten like 5 showings today. I got 10 showings today. But there's a difference between an agent having their client get pre-approved before showing houses and then an agent just saying, I am so hungry, I'm going to show them a house. And I think there's a lot of that going on. I'm not 100% sure, because every time we work with a client, we make sure they're either approved or they got the funds to purchase before we're out there showing houses and disrupting somebody's life to get into their house and show it. But I do know in the past, when I was a very beginner agent, I didn't care. I'm like, okay, you want to go show a house? Yeah, come with me. I'm twiddling my thumbs. I don't have anything better to do. So I do think that there is some of those buyers that are like, I want to buy a house, but they haven't crunched numbers. They haven't looked, especially when you're playing with the Zillow mortgage calculator. They automatically plug in and you're putting 20% down. So, well, some people don't have 20% down. And on top of that, some people, that doesn't calculate personal mortgage insurance. So
totally. Well,
but guys, what do you think? What have you been seeing on social media and all that kind of stuff?
Yeah, I found it interesting, this article too. I'll kind of skim through it here real quick. It's saying another head scratcher, 61% of Americans told the pollsters or whoever made this article, current mortgage rates are unprecedented, meaning that they have never been seen before. And then it continues to say, this is the opinion of this article writers, but it's not unprecedented. Over the last 50 years, NerdWallet reports 30-year mortgages rates have averaged 7.75%. Mortgage rates in the 6 to 7% range were common in 2008. Nobody cares.
Yeah.
That's why I don't think that's why I brought this up, is it's such a different economic environment. It doesn't matter. I mean, it was not the same back then. They talk about the 80s or the 70s, the 80s and 2008. This is a completely different environment.
But on the, I'm going to be a devil's advocate since you're normally that for me, John. On this flip side, if interest rates stay at that 7%, if they stay at the 8%, then that means all these people that are buying a house and being sold the 1-2 buy down or the 1-2-3 buy down, because they're banking that they're going to refinance, they're going to be in a world of hurt if that's what they're banking on. You know what I'm saying? Like,
I don't think you're devil advocate. I think that's just a different
well, what I'm saying
situation.
is this was like, so what this article is saying is over the historical time that this is how they held. And yes, we are different. Like it's a different time because home values are so much higher than what they were. But let's say they hold at that 7, hold at that 6%, then home prices are going to have to come down.
Well, they have to.
And these people that bought with a 2-1 buy, a 1-2 buy down, a 1-2-3 buy down, and they're banking on refinancing in a couple of years, they're going to be in trouble. Yeah,
and if rates don't come down, I mean, a lot of people being a real hurt there.
Yeah,
as well. And then lastly, the article's talking about here, 70% of Americans who had planned to buy a home in 2022 did not succeed. Some of them made offers which were not accepted, which we've been through. Others shelved their plans because they couldn't afford, couldn't find affordable homes. Yeah. And I mean, that's alluding to, I think a lot of our clients and people we speak to is just the cost is just outrageous for what they're trying to do.
Yeah. And I think those people that maybe tried in 2022, but then they got pushed out of the market and they see the home prices come down, they're jumping on it right now. So it's like, as these home prices are getting pushed down, and, we were just talking to one of the agents at a brokerage today who was writing an offer. The dollars have been pushed down into, $250,000, which we hadn't seen in this certain area for a while, or being pushed down to the 500, right under 500. And these people who are seeing that, oh my gosh, it's such a good deal. And they jump on it, right? They get emotional and they jump on it. And we're not saying that it could be a good deal. It could not be. It just kind of depends on the situation. But what we're seeing is when these home prices are getting pushed down, these people that are sitting on the sidelines jump on it, not realizing that there's a lot more potentially coming down.
Right.
It's like, first opportunity to get emotional. It may not be the best thing for them at that time.
But I'll play devil's advocate too. But prices have to come substantially down, because if the rates keep continuing increasing, we're going to have a major gap, major financial gap issue there for people. Even though prices are coming down, it doesn't matter. I mean, if rates continue going up, it's going to eat up everything that you were able to.
Well, rates are twice as what they've doubled since this same time last year. So, when we started sounding this alarm and people said we're crazy.
They did.
This market's
we got a lot of dislikes on our video too.
Never going to come down. Honest. So we should probably get some of these questions.
Definitely. I'll drop into. Sorry, we got tons of them here. I'm just trying to read them. Cool. Isaac, would you recommend first-time home buyers to wait before purchasing?
John, you want to do that?
Yeah, no, totally. I hate this cliche saying. I mean, it seems like it depends on your situation. I mean, if you have to buy a home, you have to move here, you have a job, I mean, you're going to have to figure something out. If you can't find a home that's suitable for your income or your monthly payment or whatever cash or whatever you're trying to do, I mean, it may be better to rent. And we have videos on that, breaking down why it might be better to rent instead of buying.
Which we have a video. We did that 2 weeks ago. So if you haven't seen that, Isaac, I would really encourage you to go look at the rent versus buy.
My 2 things on first-time home buyers is I would highly educate yourself if you're buying a older home, even new homes, but educate yourself on HVAC systems, on the roofs, on foundations. I mean, landscaping, everything that's incorporated with the house because now you're the owner of that house. And even you may have this, this payment that you can afford, but you need to keep track of what the house is actually going to cost you because I mean, in this day and age, it's not cheap for a lot of people, especially with inflation and cost of living.
Right.
I mean, there's a lot of things to look at. I mean, that's why you want to get with somebody if you are trying to purchase that's educated on the the buying process, like one of us, or especially an inspector that you can trust and that's knowledgeable and is doing the right thing because they can really save your bacon on that.
Yeah.
Josh?
Yeah. So first-time home buyers, I mean, this is a tricky question. It again, just kind of depends. If you were just any first-time home buyer trying to use like the 99.5% financing, I'd probably encourage you to really think about it. Mm-hmm. The other thing that I would encourage you, like that I would ask is like, okay, what is your situation? Are you renting? Are you living at home? Are you in an apartment? And then expand from there. Like if you're living at home, yeah, it may not be the greatest to live at home, but if you're living rent free and you can stack away that money that you're going to be paying even more to maybe have a bigger down payment or invest that somewhere else, like, I think it was like 10 years ago, my wife and we moved into my in-laws to save up to buy our first fixer upper, and we closed on it. The day we closed on it, we started tearing it down and rebuilding it. And that's kind of what got me into real estate investing because I saw what it did. But I was willing to like, like living with your parents when you're married and you got a kid doesn't necessarily like people are like, what? Why are you doing that?
Yeah.
But I was willing to take sacrifice in order to jump into that. And so, there's a lot of things to ask to know if you should purchase or not. But if you're comfortable where you're at, I would probably just be prepared and wait on the sidelines personally.
Or have a massive, cushion on the side that you can, they used to say 6 months, of, cushion if something goes wrong. I would say more than like 12, having 12 months of cushion in case, they lose income or something. You just purchased a home, have it on the side in this environment. One more thing too on that. I'm not sure, I don't know your background. If you're a veteran too, I mean, right now, multifamily properties, you're able to a duplex, you'll be able to purchase one of those, the VA loan and rent out one side. Mm-hmm. I mean, you just talked to a gentleman last week, Josh, about everything that you do, make it self-sustaining, that pay for itself. Yeah. I mean, in this environment, we got to look at things like that.
Yeah.
Or you're going to get yourself in a deep rabbit hole.
Yep, absolutely. But, so it kind of depends, Isaac. Sorry, we can't answer it directly.
I appreciate that question though.
Yeah. Let's jump into another one.
Yep, definitely. From Owen, with the recent layoffs, do you think there will be a lot of foreclosures coming in the future for the Magic Valley?
Magic Valley. I'm not sure what kind of layoffs are happening in the Magic Valley. I'd have to dig a little bit more deeper as far in the Magic Valley, but I do, from what I have seen, I think there is some unaffordability issues in the Magic Valley as well. So,
yeah, I mean, with our recent videos that we created, Josh, with all the foreclosures, I mean, what are the main factors leading to the foreclosure rates with the layoffs, and what other factors are you seeing?
Yeah. So a couple of things that, again, nobody has a crystal ball, but the things that create foreclosure is when somebody loses their equity and they can no longer sell it, right? So we've seen that. We have a slide in here where we talked about, I don't even remember how many trillion the United States has lost in their home values, but we've lost that equity. And the more we lose equity, the less people are going to be able to sell to get out of a hardship, right? To pay off certain debts and that kind of stuff. Mm-hmm. On top of that, then you run into layoffs, or you run into people who have arms, or the arms that can't refinance, or you run into people that have like a 1, 2, 3 buy down and they can't refinance out of it, or you run into people who lose their job and can't pay. So there's a lot of things that go into the foreclosure potential that's coming, but it's hard to say. I haven't really dug deep into the Magic Valley economy situation.
Yeah. Well, thanks for the question, Owen. Mm-hmm. Cool. We'll get one more here and then we'll move on. From Johnny I Fly, I found a home in Middleton that is new. Been on the market for 184 days at $549,000. How would you recommend writing a deal if you were to put in an offer today?
Yeah, that's good. So I think
put you on the spot.
Yeah, absolutely. Now I'm giving you guys my secrets on getting a lowball offer accepted. So if you like that, you should give us a like. But I won't give you all the things. I think one thing that I would do is I would look at, okay, who's the builder behind it? How much inventory do they have? And then I would personally, I go through and I see, okay, what have these builders been willing to do? Has this builder been willing to drop it 20 grand? Have they been dropping it 50 grand? Are they dropping it at all? We have a builder, just because of the high traffic numbers that we saw back in the beginning of February, he started increasing his home prices instead of decreasing. So I would go into that first. And then after I figure out how much this seller has dropped in the past, then we would kind of structure something based off of that. If we're talking about cash, and we're doing a quick close, that might have a little bit more weight if this is a new build and it's been sitting for a while. If it's I found a house that is new. Yeah, so it is a new build. So anyways, that's kind of where I would start. And then from there, then we'd just start the negotiating, and figure out what we can do.
Yeah. And again, if you want more detail, you're always welcome to email us. Our email's in the description, or info@goodnewsrealtygroup.com. We can kind of look in your discussion. We just have to sometimes tread water, because if you are in contract with another licensed agent, it's got to be really careful what we say.
Yeah,
we don't want to,
because we can't interfere with client agent relationships, especially me being a designated broker. So if you call us and you want some, personal advice, you're welcome to call us. The number's also up there.
Yeah, definitely. Awesome. Thanks for the question. Cool. We'll get back into the slides here, Josh. I know you kind of wanted to go over Black Knight here.
Yes. Black Knight. Yeah. So this is just, well, you guys know who Black Knight is, right? They're a big research firm, but they were talking about how purchase locks are still down 41% year over year. And so I just bring that up because, a lot of agents and lenders were touting and we're, saying, hey, we've hit the bottom. Now we're coming back up.
Mm-hmm. A lot of them, almost 80% of them, I swear.
Yeah, a lot. Yeah, a lot. So, so I just want to just remind you guys, like, based off of this stuff that we're seeing, and based off of the pendings and the inventory that we have, we haven't hit bottom. I mean, the top half of our market that's above 500,000 still has to be squeezed down. It still has to be squeezed down, and so I think we still have a ways to go before we hit the bottom. And so this is just some research from somebody else, Black Knight, that put this together.
It's quite a bit, 41%.
Yeah. So
that's a statistic we need to continue to watch. I think
have
a lot of importance there.
Absolutely.
I did want to bring up this question right here. I kind of.
You didn't tell me about this.
Yeah, I didn't. I just threw it in there. But it says, Josh, I think there is a lot more room for price reductions in the Treasure Valley. I also don't think it's going to end in Q4 of 23. We've been watching a lot of homes with acreage that have sold between 300 and 400,000 in 2017 and 2020, which were then listed at 1 to 1.2 million the beginning of 21 and 22.
Yeah.
Many have been dropping the price by the month, some by hundreds of thousands, which we kind of just alluded to in our last video.
Yeah.
Some been on 100 days plus, which we've just looked tons of properties like that. Anyways, my point is I have also been following the California market, housing market, which has been collapsing since a lot of the luxury home buyers have been from California. I assume that the pipeline is going to be severely reduced. And the reason I bring this up, Josh, is because I feel like, in our last couple live streams, we've been talking about, Washington, California, kind of, they're the, even though people have an issue with a lot of outsiders coming into the state, I mean, they're all doing it, but it's going to stop stop bringing in with all that real estate's not going to be purchased. So it's going to be sitting longer. How do you react to that?
So, well, like this week, I talked to 1, 2, maybe 3 sellers that have property with acreage. Because right now we have a handful of clients that are looking for homes with acreage. And so anyways, I talked to a couple agents that they pulled their house off the market. They tried to get it sold, but they couldn't. So they pulled it off, and now they're getting ready to put it back on in March, like I said. And some of these sellers, I think they just have this mindset of like there's this battle between buyer and seller and who's going to win out, and I think ultimately if the interest rates stay where they are, the seller's eventually going to have to break. Now, there are people that are getting that fear of missing out and they're just jumping right into it. But it's not sustainable. Like we're the housing market that we're in right now is not sustainable. And, so I think more of these land properties right now, our inventory for homes on acreage is a little bit lower. And some of those have been sitting a while. Some of them have gone pending. I'm not overlooking any of that kind of stuff. But we are going to, I think, see more properties come on the market here in March with, people with land and that kind of stuff. So just based off of the handful of conversations I've had over the weekend.
Yeah. And I do agree Dan, I do appreciate you commenting and watching our videos. But I do agree that the pipeline will be restricted because, like we're talking about the income here in Idaho, I mean, a lot of outsiders have to be able to purchase that, or it's a very minimal few here that can afford that type of property. So they will sit and prices will come down. Yeah, definitely. But again, thanks for that question. All right, Josh, you want to talk about mortgage applications?
Yep. So this is based off of the week ending in February 17th. And so again, we just want to bring you up to date current data, and this is from the Mortgage Bankers Association, and they're saying that our mortgage applications actually decreased 18% from the week prior, which that's the biggest decrease we've had in the last couple of weeks. When we're talking about week over week, but we're still 41% lower than the same time a year ago. And so, yes, people are buying houses, but our demand is still lower, and as long as this number stays low and our inventory continues to increase, then that's just going to push home prices down more. So.
Yeah. And one thing I just kind of want to bring up on there, like, real estate works on an ebb and flow of like 30, 60, 90 days, this flow of, up and down, up and down, up and down. And I think people get really excited when we're up because they're seeing numbers, everything's good. And all of a sudden we're down. But, a lot of times we're 30, 60 days behind what the market's doing.
Yeah.
Most of the time.
Yeah.
Anyways. Cool. And you want to talk about commercial lending as well?
Yeah. Oh, yes. So this was another thing, right? Because, and so this is an article, I believe this is from the Mortgage Bankers Association, and they're expecting that the commercial lending is also going to fall. It's going to fall. They originally thought it was going to be at $804 billion, and now they're thinking it's only going to be at $684 billion. So we are seeing the commercial world, based off of these things, that it's going to decline from what they expected last year, and so, yeah, we'll just kind of see how that trend follows as well, because we have multifamily being built. We have a slide in here. There's about 2,000 multifamily units being built in the Treasure Valley. And so if these people are building to hold it, that's something different than if they're building it hoping to sell it. And so that's another trend that we got to follow, because as these units come on the market, that's going to push our rental market. And as our rental market gets pushed down, then I don't think we have the slide here, but we have about 46% of the investor purchasers are pulling back, and again, yes, with it being 46%, there is that still 54% that are buying. I mean, we've seen people who, I don't know if they pulled out a HELOC and a house to buy something or what, but there are people still buying investment properties, just not quite. Oh, there it is.
Yeah, that's investor home purchases plunged by half in fourth quarter amid housing slump. And I don't know if I'll bring the big screen up here so you guys can see it. It says, yeah, I mean, kind of just going over what you're saying, talking about the 46% there and the first quarter of 2020.
Yeah, so I want to hit this. So
yeah,
this was a article put together by Wall Street Journal, and the green section here on the article, it says by the first quarter of 2022, investors accounted for 1 in every 5 purchases. And if they've dropped 46%, so that's almost like it's dropped to now it's going to be 1 in every 10 homes that are sold, which is going to change, right? They were buyers in the market. So they brought the demand, but now that demand has been squeezed. And now the other people which is good news for people who are looking to buy a home to live in, because, it's giving them an opportunity. They don't have to necessarily fight against one of these investors as much. But with that demand coming out, as long as the rest of the demand, I think we're still.
Yeah, and it's kind of bringing up this article right here, which is kind of staggering to look at. I know you threw this in today. U.S. homeowners have lost $2.3 trillion in value since June peak. I'll expand it up here so I can read it for you guys. The total value of U.S. homes was $45.3 trillion at the end of 22, down 4.9, $2.3 trillion from a record high of $47.7 trillion in June. This is the largest June to December drop percentage in terms since 2008.
Yeah.
With the total value of U.S. homes was up 6.5 last year. Earlier in December, that was the smallest year-over-year increase during any month since August 2020. So, I mean, look at this graph. Yeah. That's just insane.
And that's what we've been talking about, right? That's what we've been talking about all of last year. Like, hey, if you're getting the market, just like, you really need to be considering this, because we are still seeing price, and we're still saying, hey, you need to be careful getting in the market. Last year, it was a little bit more like we're like, this is coming down, and it's coming down hard. And this year, we just kind of follow the Fed to see what they do, because that helps, the investors know what they're doing with the.
Here's what gets me on this is we see a lot of agents on YouTube and Facebook and everywhere, and they're like, it's okay. You're still up 0.2% from a year ago when you purchased, but you know what? Those gains, real estate is the biggest income wealth generator for a lot of families and a lot of middle class, people. And when they purchase real estate and they have those gains, they're able to take it out, refinance, reinvest. I mean, that's a massive loss for a lot of people. I mean, if you bought a home in 21, and you were up $100,000 and now you lost 150,000, you're negative. And that's a huge hurt for a lot of people. And
Well, just in this video that we launched on Tuesday, which if you haven't watched it, go back and watch it and let us know your thoughts on it. But we showed that somebody bought a house in 2020, I think it was 22, 21, and they just went under contract for $100,000 less than what they bought it for. So the equity that they thought they had, they lost real quick, and again, I don't want to overlook the people who did, because I bought an investment property at the end of I think it was at the end of 2020.
Right.
And so, no, sorry, end of 2021. So, there's a chance I lost equity in that, but it's cash flowing, thankfully. And so, we're holding on to it, but that's a lot of equity. And so if people are just like, hey, buy it because, anyways, I don't know. There's a lot more I can say on this, but I don't want to ramble.
Yeah, I mean, this could rabbit hole to a lot of things. I just one thing too, like homes where people are like, they're stupid for selling and losing 100,000. Well, sometimes life dictates that people have to do that, and it sucks because now they're being crushed by. Yeah, they have to come up with that money. I mean, to pay off the loans. So
and if this person bought in cash, then they have it. But this is what we're talking about, the foreclosure possibilities, right? If they didn't buy it cash and they didn't have the cash to make up, then now this particular property that we talked about in that video didn't show that it was under foreclosure or as a bank owned or any of that. But if the equity was gone and it was financed, then they would be in a world of hurt.
Yeah.
So
definitely. Cool. I'll let you go over this.
Did I do this? Yes, I did.
This is from last week.
Okay. So this is last week. So this is lower interest rates. And again, we just want to do a year-over-year comparison. And this is for January instead of February numbers. But let's say you bought the median sales price, which is $487, and you put 5% down, and your interest rate was at 6.3%. So interest rates are higher than that, unless you buy it down and FICO score and all that kind of stuff. We're not lenders, but your principal and interest for this house, if you put 5% down, you're looking at $3,192 plus so that's principal, interest, taxes, and insurance. Now, taxes can be more than that. We've had some clients that their taxes are $400 a month. So, it just kind of depends on where you're buying and what kind of property you're buying. But for this specific thing, it was almost $3,200 plus your personal mortgage insurance. So take this and go back a year ago when the median sales price was $540. But let's say you bought a house for almost $590, but 5% down. Your principal, interest, taxes, and insurance is only $2,400, which is still a little bit higher. But you're talking about a $700, almost an $800 swing from just 1 year on your payment. So that's just something we want to bring to light. And yes, people are being suckered into this 1, 2, 3 buy down. And How We Became Debt Free made a comment that he believes it's no different than the adjustable rate mortgage. Which, there is some of that it's not, that is similar to the adjustable rate mortgage, just a little different, but the risk of the 1, 2, 3 buy down is, to me, the same as the adjustable rate mortgage, because what people sell the adjustable rate mortgage on is you can refinance it in a couple of years when the rates come down. But if the rates don't come down, then you're hosed. And same thing with the 1, 2, 3 or the 1, 2 buy down. If the interest rates don't come down, you can't refinance. So you really have to sharpen your pencil before you even consider one of those loan products.
I did want to bring up a question. We got a lot of questions to go through, but royally, most of the house's valuation is just relation of how much people can borrow and the payment they follow up with. So of course, appreciation is going to take it. Yes and no. Thoughts on that, Josh?
Yeah, well, yeah, because what drove this inflation is how cheap money was. Money was super cheap. Some people locked in under 3%. So because they could do that, the money was cheap. So on a loan, they could, and then people were going out and getting more loans and more loans and more loans, or they could buy property and they could buy something at maybe a 6 or a 7 cap, and their interest rate was like a 3, or they could buy it at a 5 cap. And if their interest rate was around 3.5, then they would still be cash flowing potentially. And so I would agree with the borrowing helps push inflation. I would actually agree with that a little bit.
Most of the house valuations is just a relation.
I don't think it's
how
everything.
much people can borrow. So I'm not talking. I don't know if she's talking about or he or she is talking about the equity in the house.
No. I think Roy Lee. I think you're talking about that the appreciation is due because of what you can borrow. So like $90,000. If you make $90,000, you can borrow, $500,000 house with a 5% down payment.
Right.
If you don't buy down your interest rate, that that kind of stuff.
Right.
So I think, I would agree, and that's why when interest rates, and we talked, and the Fed was coming out to say they're going to raise these rates, we were talking about, okay, I think we're going to see something change here.
Yeah, definitely. All right, let's get into some questions here, and then we'll move on. How we became debt free? I'm with John. Can't even compare it to the 80s now. Wages have not followed well.
Yes.
I mean, I was born in 87, so I can't really speak for, I don't have a lot of experience in the early 80s, but I can look at data.
Yeah.
And I agree with you. I mean, it just irks me every time people go back to like, well, it's just like the 80s. Well, no, it's not, because we can see the data on there as well.
John, did you know I was born in 2000?
No, you weren't.
I know.
Oh, I was like, what are you talking about? I don't even know who you are. So, right. I got to that question already. We'll go to another one here from Johnny. Good seeing you guys again. I'd like Jonathan to be my agent 8 months from now. Well, we're ready to go in 8 months. When you're ready, we're going to make it happen. We've been through that.
Yeah.
So good to go on that. Traveler. In 1987, I bought my first house. The interest rates were just under 10%. So there's, just another one. But what'd you pay for the house? That's the thing. So I mean, that's a big difference with.
Well, and that's what's driving our market down, right?
Yeah. I mean, because I guarantee you didn't pay.
That kind of goes along with Raleigh's comment,
right?
About
but he wasn't paying, or he or she wasn't paying $500,000 for a home. Pretty sure in 1987.
Yes, yeah, that's
because the income, as we know from our videos, have not kept up with the current income now.
Yeah,
as well. How it became debt free. I
hit on that one.
Oh, you did. Yep. Okay, definitely. And Brian, go here.
Also, if you're just joining us, we'd love it if you like this video, if you find any value in this, and if you haven't subscribed to our channel, but you want to follow this with us, we'd love it, that subscription. And don't forget to hit that notification bell, because we have had some of our subscribers come out and message us, hey, we weren't notified. It took us 2 days before YouTube notified us of your new video. So make sure you hit that bell, and you can actually customize the bell. So make sure you customize that.
That's a lot of information there, Josh.
I'm sorry. That was my.
Did you practice that one?
That was my couple commercials.
Perfect. So. From Brian, I feel like they're squeezing out the middle class. I agree 100%.
Yeah,
Josh.
Yeah, I agree too. And again, kind of what I was saying is these home prices are dropping, and then these people are just jumping on it. And I think we're still telling people you got to be patient, because you don't want to make a. Let me get. I gotta give it. Can I ramble real fast? I gotta give an example. So there was a house a client was looking at. The listing agent sent us the inspection on it, and when we went through the inspection, I'm like, "Whew, that's a lot of work that needs to be done." Based off of the work that needs to be done and the value that this house is listed at, we should be able to lowball it, right? Just based off of other homes in that area and that kind of stuff. And come to find out, they had a strong offer. It wasn't full price. They had a strong offer. And I'm just kind of scratching my head, because I was like, man, there's water in the crawl space, and there's, swollen boards, and, I mean, there's a lot of money that HVAC wasn't using. And anyways, so just be patient and don't get emotional about a house. That's rule number one. Don't be emotional about it.
Well, I think there's one thing missing from this comment too, is it's a massive transfer of wealth as well. I mean, like I said earlier, for a majority of Americans, real estate is the biggest wealth generator they'll ever see in their lives. I mean, some of the income or some of the profits that people have had from, average American middle-class families have been the largest they've ever seen, and it's a hard hit when you're not able to do that.
Yeah.
As well.
Yeah.
Awesome.
And Brian, just to say one more thing, I think that's why we are encouraging our clients to just like be patient when they're house shopping, just because, I mean, one bad move and, let's say you buy a house and you could be into it, $20,000-$30,000 because different repairs and stuff. So.
Yeah. I don't know, from Johnny, what do you guys think about lease to own homes? And do you think that will become more common given the current environment?
Yeah. So I didn't get a touch on it on this last video, but we have seen an increase in owner carries, which is kind of like a lease to own. And we are, there are people that are talking about, hey, I'm thinking about doing a lease option to my friend or whoever it may be. So, we are seeing more of those come. It's just,
I just think some of them are good. Some of them are dangerous. I mean, you got to be sure, you got to know what you're doing with the contracts, because people could really take advantage of a situation like that.
Yeah. Yeah. Let's hit Johnny Flies. How's the job market up in Idaho? And then roll back into the slides.
Cool. Johnny I Fly. How's the job market in Idaho? Josh.
Yeah. So we've hit on this. Now, I didn't see any major. I'm watching my four boys. So because my wife is having a girls trip in Arizona, so I didn't get any time to dive into if there's any more releases on layoffs. Last live video we did, we talked about how Micron doubled their local layoffs.
Actually, we didn't get into that. I can bring it up now.
Oh, we didn't.
Yeah.
Oh gosh. Okay.
Yeah, we were way behind last time. So right here.
So we didn't even get to it.
So Micron announces an additional 5% layoffs, totaling layoffs in Boise to be 10%. Layoffs at Micron roughly double. Total workforce reductions now at 15%.
Yeah.
So
yeah. So Micron, they originally came out and said they're laying off 5%. Then they sent an email and saying, okay, actually, we're going to do an additional 5% of our local market. So this isn't, worldwide, because Micron is a worldwide company. So this is here locally. And so they are laying off more people. I think it was 2 live streams ago, we talked about how St. Luke's is announced they're going to lay off 2%. And then, as far as the others, like I said, I haven't been able to jump in to see in the last couple of days to see if there's any new, big company announcements on layoffs.
Yeah. So we made a video today on our other channel talking about that. And I'll get the data so I actually have it, but there is some projected more layoffs from Amazon and HP as well. So I can bring those up next week. We can have those hard numbers for you as well. But appreciate the question on that one. Josh, you want to touch on this? This is from our last video.
Yeah. So this was actually a subscriber sent me this, which is pretty sweet. Got to read through the article. So this is Moody's Analytics, their forecast. And so they're saying Pocatello is going to drop about 9.9% in 2023. For those of you guys who've been asking us to touch on Pocatello, there's this. And then Boise, they're projecting that they're going to see about a 9.5% decline in the Boise market. So that kind of falls almost along the lines of, it's no debt. I can't remember what was that comment? How we became debt free. Mm-hmm. So it kind of he's saying 20%, but Moody Analytics is saying, hey, we're still thinking about 9.5. And they're saying nationwide, there's 178 markets that are going to see at least a 5% decline.
Yeah, definitely. Awesome. We got a couple more questions here. We'll jump into these two. From GoGo. Great show, guys. Well, hey, we appreciate that. We're trying every week. We're out here trying to make it happen every single Thursday and make videos on top of that and stay busy. So we really appreciate comments like that.
And be with our family. I mean, we're trying to juggle all that kind of stuff and have a life, but we haven't had that much lately.
Another comment from Roy Lee. I feel like people who locked in at 3.5 rates are the best position because they can just rent them out, cash flow possibly till rates go down if in a good market.
Yes and no. So if you've seen some of our videos, we've actually taken some people who bought and we said, okay, let's say they got a 3.5, and some of those people aren't able to rent out. Right. So we did one live study of a property. We saw what it sold. We guessed. Well, I knew what it sold for, but on the actual video, we kind of guessed. And so when we translate it, he couldn't get it rented. He had to drop it enough. And then he hired a property management. And so by that time, it was looking like a loss. And that was assuming, and then if anything broke, then it was definitely a loss. Or if he had to fix anything, it was definitely a loss. So yes, I would agree. People who have 3.5% interest rates, they are in a good position. But with the rents the way they are, like one of our rentals that we have, we're going to take a pretty big hit when we do a new release, just to be competitive. And we want to get a really good tenant in it. But we aren't going to.
Before you go too far, Josh, too, also something to keep in mind, especially in Idaho, when you're a primary owner, you have the tax exemption in place, takes $125,000 off the assessed value. But as soon as you move out and you rent it out, and it becomes, a secondary house, that tax rate goes back up. Yeah. So that payment you thought you had goes up. And yes, people are going to do the argument, well, people are paying the majority of your mortgage. Yes, I understand. Worst case,
it's just when you're upside down, it's a negative cash flow. That's what you have to avoid.
Correct.
I think that's what you're hitting on, right?
Yeah, and some people can't afford that negative cash flow there. So, that's why I say yes and no. It just depends on the situation there as well.
Yep.
Yeah.
But yeah, I think as long as the property can cash flow in the rental market, then
yeah, definitely. Yeah. And I appreciate the question as well. From Nick, does the potential impending wave of foreclosures translate into a good opportunity for home buyers? Are bank-owned homes a good buy or a hard pass?
So that's tricky. So short sales are long sales, right? So even though it's a short sale, it's really going to take a long time to get it closed. we've helped a client. The downside about a foreclosure is there's a right of redemption. And so if you're buying a foreclosed property and it went through the foreclosure process and and you buy it, you have the equitable title, but you don't have legal title because the buyer has the right of redemption for, I believe it's 180 days.
A lot of people don't know.
Yeah. So you just got to be careful with the foreclosure. Now, if you buy it pre-foreclosure and it doesn't go fully through the foreclosure process, and now that's a different situation. But if you're buying it out of foreclosure, then you have to be careful of that right of redemption.
Talk about the timelines, Josh, because some people don't understand.
I think it's 180. So from the time you close to the time it's actually legally yours and the right of redemption goes away, I believe it's 180 days.
Yeah, but when you say close, I mean, even talk about how long.
You give them the money. You give the sheriff or the courthouse or the county. You give them the money, and now it's almost yours. You have equitable title. You can go in there. You can fix things up. You can do that kind of stuff. But anytime between day one of closing on it and day 179, I just hope these days are right. If I'm wrong,
someone will call you out. Don't worry.
The buyer can come back and say, actually, I want to buy it back. So they buy it back from you at the cost that you paid for it, plus any interest that you accrued during that time frame. So you just gotta be careful. And then bank-owned HUDs, I mean, there are good opportunities for bank-owned and short. I mean, those sometimes have good opportunities. Sometimes they're not. I got to share a couple other things. So back in 2007, 2008, when I was like 6 years old. No, just kidding. I wasn't 6, but when people were going to lose their house, they just went through and they trashed it. Right. So they would,
or stole everything out.
Stole everything out of the bank-owned property that my wife and I bought, there was holes in every single room so that the neighborhood kids could crawl through it. Right. It was their neighborhood playhouse. And on top of that, there were some other things that were done to the house that we had to fix. So there's opportunity, but don't, I would say don't expect to walk into like a turnkey house. There's sometimes that can happen, but be prepared to put some sweat equity.
Yeah. And on top of the right of redemption, I also want to say, I mean, this just came up the other day. Somebody contacted us today. I see these homes on Zillow that are pre-foreclosure or foreclosure, and they're like, what's going on with those? But I what I was going to is, as well as those processes have to go through the bank. I mean, that could take 3 months to a year. So, I mean, you have to know your loan type. I mean, usually it's just cash purchases, but you got to be really careful with that too, because I mean, it could take forever for them to be able to market that property and sell it.
HUD homes and bank-owned REOs, short sales, you can finance those. Foreclosure a little bit trickier because of that right of redemption.
Definitely. Cool. Well, I want to respect everybody's time. We're approaching an hour. I want to go over another slide here real quick, Josh, or have you talked about it here yet? Threw up here. I thought it was pretty interesting to people to see here.
Yeah. So this is Fannie Mae's forecast for year over year, and then this is the MBA. So Fannie Mae is projecting year over year decreases in home sales to drop by 22%, which they're saying, okay, we're going to see a huge drop in demand, more than what we saw back in 2022. So in 2022, if you guys follow our channel, we talked about how I think we had 5,000 less homes sold in 2022 than we did in 2021. And so if we see another 20% drop, that's going to be another, that's going to be another 4,000 homes less. So we're going to look at about 16 if that number stays true to our local market. Now, obviously, we'll follow that. But then the MBA, Mortgage Bankers Association, is talking about almost a 13% drop in home sales year over year. And then what they believe is then it's going to turn around in 2024. So they think it's going to stay. And then right underneath that, it says the existing home median price forecast. They're seeing that it's going to drop as well in 2023. All the way through 2024, according to Fannie Mae.
Right.
But the Mortgage Bankers Association thinks things are going to turn around in 2024.
Well, what do you guys think? And also, what do you think, Josh?
Yeah. Well, I think I
need to buy you a crystal ball on Amazon. Just have it back there.
Yes, like absolutely.
So get a little crystal ball.
Absolutely. Well, I think everybody on here has heard what I think. I think we still have some declines coming, especially if the 10-year Treasury continues to rise. The Fed meetings, they talked about they're going to stay strong. And I think what got people in trouble is after January, they thought, okay, the Fed's going to pivot. They're going to change. They're not going to hold. And all of a sudden they came down. But then the CPI report came out. And anyways, long story short, treasuries jumped about 60 basis points.
Yeah, definitely.
And I'll share one more thing. I was talking about the difference between 2020 home prices, April 2020, not the end of 2020, because they started creeping up about 6 months, probably. I think it was October. They started really firing up, and then 2021 they did. But how we still have a ways to go to hit the 2020 levels, with a 4% increase year over year. But I personally would love to see them come back to the 2020 levels. Will they come back down to the 2020 levels? Well, that depends. If we have a hard landing, then and the whole U.S. economy goes into recession, yeah, we're gonna see some pretty hard declines.
Well, speaking of recession, inflation, I thought this comment was funny. In the 1980s, you could buy a Snickers candy bar for 25 cents compared to nowadays. No one to their own money. It's a very good point. I mean, it's because it's so different. I mean, from 2020, it's the inflation rates, cost of living is just out of control. Yeah, definitely. Got a couple more comments here from Nick. Good to know. Thanks, guys. Love the local market, folks. Well, we appreciate that comment. That's what we're trying to do here. We don't feel like a lot of people are doing it, especially on this type of format. So if you enjoy it,
well, we don't see a lot of real estate agents and real estate brokers talking about this, or and so we're trying to be the real estate agents and brokers that are out here trying to bring you the real life stuff. So
and we're trying to bring them on. We're trying to bring opposite opinions on. So the more people we can get on to actually have their opinion.
Yeah. Which, if you guys have a friend that's a real estate agent and you want them to come on, we are open to conversations. We don't feel like, oh, this is just for us. Like, we're very open to having other agents on here. We've reached out to a handful. We've had one come on, which if you guys were on a live stream last week, you saw it, but a couple have,
which I really enjoyed. A lot of people enjoyed that.
And, and it's just a conversation. We're not here to beat each other up, just have a conversation about it. So if you guys have anybody, or if you are a real estate agent and you want to come on, just shoot us an email and we can talk about it.
I like JD Punk's comment. They don't want to bring the truth. Well, we have a lot of men that they like to sit behind the keyboard and leave comments behind names and not tell us who they are or want to come on and defend their point, which is mute. But it's pretty crazy. He's also saying I'm sticking to my 20% job, which I agree with. I think we're going to hit that depending on the type of property.
I think we just have to, we don't have a crystal ball, but we'll have to see how the whole economy plays out.
Yeah. And how we became different. Thanks, guys. Love the honest Kool-Aid drinking content. Very view of you guys around.
Yeah, I'm drinking my bubbly.
Yeah. Well, I've had coffee
and my coffee,
and a bunch of stuff. So no Kool-Aid here.
No Kool-Aid,
sugar-free. So, well, Josh, I think we're gonna wrap up. I just, we value your guys' time. We're going over an hour here. Anything you want to wrap up with, Josh, and kind of just finish off with maybe some words of wisdom from Josh?
Yeah, I don't have words of wisdom, but I would just encourage you guys, again, if you're in the market looking at houses, just really do your homework, do your research. If you guys have questions, I think we took about five calls this week from people who are either moving to this area or think about buying homes that currently live here. And so, we're always open for a conversation. Sometimes we can't answer right away just because of our hectic schedule, but we will get back to you. So even those who have sent us an email and we haven't responded yet, we will get back to you. So don't be shy. We like to hear from you guys.
Definitely. Well, once again, I appreciate everybody being here for over an hour. It's awesome. Please leave a comment, like, or subscribe. If we missed your comment, leave it below because it'll eventually show up on YouTube once they process the video and then we can respond to it. But other than that, we appreciate it.
You guys until next week. We'll see you hopefully, guys, on Tuesday or Thursday.
Have a good evening.